Welcome back to another of our videos, guys. We are here to educate you, and today we wanted to discuss a topic that we often get asked from our clients. That is whether I should be owning individual stocks, whether I should be owning mutual funds, or whether I should be owning exchange-traded funds, better known as ETFs. We are going to show that when you have a large pool of capital, you are better off owning the underlying securities rather than buying mutual funds and ETFs. What are some of the reasons for this? The number one reason is fees. This is data that is compiled by Morningstar, and as you can see, actively managed mutual funds and actively managed exchange-traded funds have a fee of about 60 basis points or 0.6% every single year. Now, this fee is going to be charged irrespective if the mutual fund manager did a good job or they did a poor job, and those fees are going to be ongoing. Even if you decide to buy a passive mutual fund or passive ETFs, there are still costs associated with those, on average about 10 basis points or 0.1%. Those costs are going to have an important impact on how much money you're going to accumulate at the end of your time horizon. As they say, costs are very, very important. On the other hand, stocks have zero underlying costs. Also, many platforms have no transaction fees. As a result, when you buy a stock, you don't incur any cost. And also, of course, when you hold the stock, there is no ongoing fees associated with holding the security. So the number one reason, or the first reason why we prefer individual stocks versus mutual funds or ETFs is fees. Fees are significantly lower by owning individual stocks. The second reason is the tax efficiency. Stocks are way more tax efficient than mutual funds or ETFs. When you buy a mutual fund, you basically passing the buy and sell decision to a mutual fund manager. So the mutual fund manager decides when to buy and decides, more importantly, when to sell a stock. When a stock has appreciated and the mutual fund manager thinks that it's time to sell, he's going to sell. There's going to be a capital gain. Who's going to be responsible for that capital gain? You. And these are often known as phantom taxable gains. Even though the mutual fund net asset value might have decreased over the year, at the end of the year, you are going to get a nasty tax surprise because the mutual fund manager sold the security, generated a capital gain, and you are going to be on the hook for it in form of taxes. When you own individual stocks, you are under control of buy and sell decisions. There is no nasty surprises come the end of the year because you know exactly when you bought and, more importantly, when you sold the security. As a result, you can be better prepared for the tax impact associated with selling the stocks. Exchange-traded funds are more tax efficient than mutual funds. However, exchange-traded funds are often more specialized, resulting in higher fees associated with ETFs. One reason why you might like to own mutual funds and ETFs is when you have a small amount of capital to work with. Let's say you only have $1,000 to work with. Well, one share of Spotify costs almost $700. As a result, if you only have $1,000 to invest, you would be able to only buy one share of Spotify, meaning that your portfolio would be highly undiversified. As a result, when you're working with a small amount of money, we do prefer owning mutual funds and ETFs to individual stocks because that will give you the diversification benefit. We prefer exchange-traded funds to mutual funds because they are more tax efficient. However, if you are working with a large amount of capital, owning the underlying securities is significantly better because, as we mentioned, they are more tax efficient, they have lower fees. Most of the investment strategies that we run at AMP Consulting Group have underlying securities rather than mutual funds and ETF. This means that the overall cost of the portfolio is zero or very close to it. If you'd like to find out more about our strategies, please contact us at info@advisormanageportfolios.com. Please also don't forget to like and subscribe to our videos, and we look forward to educating you further.